Don't you love the Friday, Monday follow through? Strong close on Friday, some good news over the weekend, and we're back, perhaps making a new all-time closing high in the S&Ps. We got analysts moving some stocks, we got retail earnings, Biotech Monday. I mean, where did we hear that before? Tim Seymour joins us at 8:45. It's a short week. Let's get it started here on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, team, let's get it started. Up nearly 30 handles, 16.75. I got that all-time closing high right here at 6016. Buck in the red by 48 cents, 107.02. TLT shown a bid up buck 20, 91.59. Gold and silver in the red. GLD down 206, 247.78. Silver, that ETF is down 42 cents at 28.05. Bitcoin futures, well, they're just consolidating up here, that six-figure level, down $1,212 and 98,275. I'm going to remove my charts and I am going to add Triple D. Good morning, Triple D. I'm going to add CF, Christian Fromhertz, and none other but my buddy from the Michigan game on Saturday, Aaron Bree, brought home a Michigan victory. How's everyone doing this morning?
We're good. We're good. Had a little bit of a rough night. Daughter is sick again. I mean, this is the time of the year where everybody's sick. It seems like everybody's got COVID or the flu. Are you guys getting like that? What's it like in Michigan? Are you guys getting like sicknesses all over the place? You don't have the young kids, so maybe you don't see it as much, Joel. But friends, you guys are healthy over there. Is this just a Canadian thing?
Oh, boy. I don't know. How are things up in Saratoga Springs?
I've had a lingering cold for probably a month. I think I'm finally on the tail end of it. It's not one of those things where, and I think a lot of people, to your point, like I think a lot of people have this where they're kind of coughing a little bit.
Yeah.
You know, once the weather kind of changed a little bit, and it's just like it doesn't quite go away or it comes back a little bit. I know a couple people like that, so I think I'm finally shifting this. You know, as Thanksgiving comes and you're going to be around family. I'm starting to get that away. So sorry to hear that it's going through the school system where you're at, Dennis.
Yeah, and I've been sick. You know, I was sick last week. I'm feeling pretty good now, but again, the lingering cough where I'm just the odd time, you know, like it's like every 5-10 minutes, I got to cough again. So it's that lingering cough that doesn't go away from me, but like otherwise, I feel okay. So. But anyways, let's go. Let's do this. What's up?
All right, let's go ahead and get to it. We've got one major headline this morning that we are starting with. This is Cassava Sciences biotech stock trading down now 85% in the pre-market session. This comes after the company, announced they were going to make an announcement this morning. And basically the news that we got so far is that the company's Phase 3 data did not meet co-primary endpoints. Then Cassava Sciences said they're halting their Alzheimer's drug trials after the Phase 3 results. This was there's not that many treatments. There's not really any treatments for Alzheimer's in the market. So Cassava and like Biogen have always traded higher when they get some of this positive data. Well, now you're seeing what happens when they get bad data. And that's what Cassava got, was bad data from their Phase 3 trials, halted the further, trials for this drug altogether, announced that it, again, did not meet the primary endpoints. And the stock is just getting absolutely shellacked here. Closed down 17.7% on Friday, down another $22.15 as of right now this morning, down 84% pre-market.
Cannot miss your primary endpoint when you're a one-trick pony and you're working on Alzheimer's, and it's a hard one. Like, we know how hard it is to get those drugs through. Biogen fighting obviously with theirs for years and years before finally, getting it, even the approval that they have, which isn't still even full approval, I don't think. Sava, though, this is getting killed. I've got to give a huge shout out to Dan Rosenblum, who is at Shark Biotech on Twitter. Followed him for years. He tweeted out last night when they announced that they were having the PR this morning at 8 o'clock. He said, I'll just read the tweet. It said, pretty sure positive data PR would not be previewed like this. And then he said it's also the CEO not being mentioned in the PR, just the CFO on the bottom is odd. So he kind of thought that they were going to miss, that they were going to miss the primary endpoint. And at that time, the stock still hadn't been halted, never got halted till this morning. It was trading up at $27. That's one of the best calls I've ever seen on Twitter. So calling that out. Stock is down 83% here right now. I'm going to reach out to Dan, see if we can get him on the show sometime. Dan Rosenblum, fantastic call, buddy.
I think there was another guy who I think has been on this show previously many, many years ago that was also tweeting about this last night. I don't know if you saw that, Dennis, or no.
Who's that? Adam?
Martin Shkreli.
Oh, was he tweeting about it too? Yeah, we've had Mark. We've had Shkreli on. We could get him. We should reach out. We've had him.
He was like banging
He's
the table last
night.
Got him. He was saying stuff like, let me find it. He was like, he basically was saying if that for every Sava holder, I will give you $1,000 if the trial meets its primary endpoint. If the trial does not work, you will delete your X account and promise to read a statistics textbook from cover to cover. He was basically just going all out, saying he would move out of the country if they met their primary endpoints. At one point, he tweeted, "If you have money on Robinhood or Interactive, short Sava now." So he was tweeting all this last night.
This was last night?
Yeah, 10:22 p.m. Last night. He was basically
saying, if you would have saw that, man.
There was some opportunity last night. I tweeted it out as well. I tweeted out, obviously just because I don't follow it closely, but I follow Shark Biotech. And last night I tweeted as well. My tweet was, interesting take from Shark Biotech. Sava trading up 4.8% on Robinhood IBKR Sunday night session. Could they be wrong with the question mark? And I was showing. So I did not trade it. It's out of my wheelhouse to try to predict whether they're going to hit or miss. But wish I would have now. Wish I would have taken a short. So fantastic call last night by Martin Shkreli and Shark Biotech and whoever else was calling this thing. Obviously, not good for shareholders here. When you miss your primary endpoint again, this is what you see. I mean, these are the spec plays. When you're in speculative biotech, it's home runs or it's, you're out. And that's it. And in this case, it looks like Sava's out.
All right, quick technicals here. Robert Carneal made a trade there. He said he potted at 385. Well, good for you. 375 is a low. Just keep an eye on that. I mean, I guess, for me, Dennis, first of all, great call by Dennis. Dennis, you said it was going to be down 50, 60%. And
I said 80. I said actually more. I said conservatively. Said yeah, I said 80. Yeah. And then and this was pre-market when we were just talking, and then just about what we're going to talk about. It's like, I think it's going to fall 80%. But then, I was like 50, 60 for fun, 84. They don't play games, man. You cannot miss. You cannot miss your primary endpoints. When you're a one-trick pony, and that's all you got, and all of a sudden the drug is like, no go. Okay, now what? This is what we are. Cassava Sciences trying to, figure it all out. So obviously, maybe they can figure it out. Maybe they can tweak. Maybe they can get it going again here. But, I mean, we've seen this happen time and time again when these companies that have basically one drug do not hit the primary endpoint. It gets ugly, ugly, ugly. Christian, you're watching this action here. What are your thoughts?
Well, this is what makes the space so difficult. And you for a lot of these studies or drug studies that are coming out, you kind of have to have a little bit of the inside track and knowing a lot about the company and about the statistics of whether or not it can be approved or not. Because not only Sava, it's really kind of a mixed space with this, because I also see another name called THRD. I'm not familiar with it, but it's down 12%. Biohaven provides an update on their drug. They're down 11%. So I feel like I jinxed you a little bit last night, because now we do have a nice winner in the space that you guys probably want to talk about too. But I feel like I jinxed you last night with the XBI trade, saying that you had
a little bit.
I got to be careful not to do that until you actually press the sell button
Yeah.
and ring the register, because I know that you have this XBI trade that you talk about over the weekend. That again, there's nothing 100%. It doesn't work all the time.
Nothing looks 100%
As we're seeing this morning, there's a lot of drug news that happens over the weekend. And XBI, even though you've got a couple names that are down here, XBI is still up. So with that said, I don't know if you want to cover this other one that's up 20%.
I'm out of XBI now. I have sold my weekend trade. I did get out of some up in the 98s, but I had a pretty large position. I wasn't able to get out of all of it up there. A lot of it I sold this morning at 97.40, so I just got out pretty recent on the bulk of the position. Would have been nice. I think it traded up to 99 on Robinhood, which was just ridiculous. That was a way overshoot, but it was thin, Joel. It was like 50 cents wide, and there wasn't much out there. That's the issue. Sometimes you look at these Robinhood trades and interact. Like sometimes it's really light volume. Like, you can't, and again, I did trade some stock up there, but it's not like it's actively trading where you're seeing thousands and thousands of shares going up and you can just easily get in and out. You got to work those orders. And sometimes, on Robinhood, even the Cassava last night was trading up, but it was a buck wide. There wasn't much of a bid. So somebody got excited when they saw the press conference and took a couple offers, and the market makers just sitting out because they don't want to play games with that. They don't know what's going on. So, I mean, that's where we're at. But the XBI weekend trade does work again. I feel like it's been like 4 or 5 weekends in a row. Usually you get a hit in there too, where, something doesn't meet the primary endpoint that can go down. Sava is not in the XBI. So that's why XBI is holding up very well here this morning. But BBIO is. And BBIO.
Before we do that, I want to can I make up a new term for the show? And they'll start using this on CNBC and all the other morning shows.
Be on Mad Money tonight, Joel.
Yeah. Two technical comments. One, don't be a hero when it's going to zero. Which is, but if I was short this puppy and it was down 22.5, I'd be like, whoo.
Boy, 84%. You take the money and run, you're going to sit there for the last 16. These things typically don't go straight to zero because there's always hope. There's always going to be the hope trade in here that, hey, maybe they, spin it, they come around, they turn the drug around somehow. We saw that happen with Biogen and their Alzheimer's drug. Remember, they got rejected and then they worked it a different way. And then we got the approval that they have, which I still don't think is a full approval. But I mean, this is a disease that there's really, no real cure for. Like even the Biogen drug is not curing it, it's helping it. But there's just no cure for this disease, horrible disease. So, you don't ever like to see this, where you've got a company working, and all of a sudden, all the work that they've done trying to cure this horrible disease, they're in phase 3. I mean, got through phase 1, got through phase 2. Doesn't hit in phase 3, and then boom, this is what happens. So you feel, just bad for the people who suffer from this disease as well. I mean, we've all got, older people that we know who suffer with Alzheimer's. So you just want to see something to help this disease, but it's hard to get it through.
All righty, let's should we go out of the biotech space?
Well, BBIO, I want to stay with it because the reason XBIO is trading higher here this morning is BBIO. It is in the XBI. It is up 20% this morning. And Friday night, BBIO was halted, and then they came out with the news. And if you have the news there, AB, let us know here.
Let's see. We have the Bridge Bios. Let's see that the Attribute earns FDA nod as first therapy with a greater than 90% TR stabilization, offering hope for ATTR-CM patients. So I don't really know quite what that means, Dennis, but I do know that it sounds like kind of the opposite of Sava, that they got good news and that their drug, had 90% plus efficacy rate or whatever it was. And the stock is trading higher by 20% this morning, or about $5. So BBIO, your big winner this morning. Sava, of course, your big loser.
Now, again, the concerning thing is sometimes these biotechs get the pop and then they pull back here. And you're starting to see that a little bit already with BBIO. $30 is a big whole number where we got up to in September. And we're starting to peel back a little bit here this morning. So you never want to see them start to leak. The leak sometimes turns into a bigger leak and then sometimes a river of sellers. And You just don't want to see that happen here.
The threat of an offering too is something that you always got to be
Sometimes,
aware
yeah.
of, right? When get the drug to market. You hit $30. That's just kind of a round number, psychological level. So if you're playing this for that big bull trade where it just keeps going all day long, you want to make sure the bulls get a nice bid, get it here, get over $30, and then you look your way closer to 31. Short term, and I mean short term support comes in at 27.75.
All right, now we'll get out of the biotech space for a little bit because we had another, interesting headline here this morning. Macy's is delaying its earnings report after an issue with some delivery expenses. I guess they're saying that an employee, an accounting employee messed up something with their delivery expenses or hid around 132 to 154 million dollars worth of cumulative delivery expenses from Q4 of 2021 through fiscal quarter ending in November 2nd, 2024. So for the past 3 years, I guess they've had some accounting errors over here at Macy's. Now the company announced it is delaying its earnings report. They said that all the data and all the earnings should be out by December 11th. So just a couple weeks here. But either way, the stock is trading lower by about 3.5% on this news.
Yeah.
And interesting story there. Yeah, I guess from what I've read, the different articles that I've read, they're really putting this all on one single employee that made some erroneous entries or tried to hide certain charges. Some weird going on here with Macy.
140 million or something. They were trying to embezzle or something like that. It's not 4 million or 1 million. How do they get out 140 million? This is an incredible scam if this is the case. Net sales, so they did give preliminary third quarter results. So net sales declined 2.4%, 4.74 billion. Comps were down 2.4%, and down 1.3% on their owned plus license plus marketplace. So anyways, the numbers were not great. So bottom line here is preliminary numbers for Macy's were not great either. So not only do they have problems with employees apparently putting on some pretty good scams here, but they also reported preliminary numbers which are below consensus here.
Okay, I made up a new saying. How about a new rule? How about when an old legacy retailer gets a buyout offer at any kind of number, you just head for the hills, right?
Yeah.
Kohl's, $65, right, Dennis? We're still waiting for that.
I learned the hard way on that one.
Yep.
Got down to 40, and I was hopeful that deal could still go through, and I ate the loss at 26, and it was a good loss to eat because the stock's 17.
And Macy's is not worth 20 or 22. It was going to go off the board at 25, right? Right. Well, that wasn't even not too long ago. That was actually earlier in the year. The only number I could give you here, and I don't think we're going to see it today, is this nice level of 1450. That was a double bottom earlier in the month. You just snuck under 15, and now you're reaching back towards 16. So big up day. People getting jammed on Friday. Going to have to puke it out today. But longer term, you can either wait for that 1450 level or lean on that level. It looks like you got some volume coming in, though, right after the initial news on Macy's accounting. It doesn't sound like as bad as at least they know what it is. It's one person stealing 170 million. Was that it?
I don't know. They signed 140. They had a range, so I didn't even know how much.
Well, at least they know. I mean, SMCI was well.
It took them a while. How many years are you doing that to be able to steal that much money? So Macy's single. I just want to read here again. Single employee responsible for small package delivery expense accounting intentionally made erroneous accounting accruals entries to hide 132 to 154 million cumulative delivery expenses. This is incredible here. I don't know how that is done. One employee, 132 to 154 million, but man, that is missing. So we can give them that they found it, but that must have been years of this going on. They didn't do this in a day. Crazy.
And right before the Macy's Day Thanksgiving parade, what a downer for the stock. Jeez.
Yeah, we're coming into that too. I mean, just Macy's all around here. I mean, we heard to Joel's point The real estate's worth $25 to $30, just the real estate and all. And I've tried to play Macy's a couple times to the long side here too, with limited success. A couple times I actually caught the right side of the momentum here. But I mean, to Joel's point, these things start breaking down and like, you got to think what you're buying to. So we can say all we want, the real estate's $25 to $30. Mall real estate is worth a hell of a lot less than it was 10 years ago. So the people who are valuing this stuff, I don't know if they're using like 10 years ago metrics here, but we know the mall is not as cool as it was a decade ago, and it's getting less cool, it seems like, every day. Maybe it's going to rebound. Maybe people are going to go back. AB would maybe know. But at the same time, it's just people buy stuff online. I know my wife used to go to the malls, go in there, do some cool shopping. Doesn't happen much anymore. Everything is bought online. So, I mean, that's killing online shopping, killing the malls. That real estate, do not kid yourself, the Macy's real estate is worth a hell of a lot less than a lot of people on Twitter say it is.
Yeah, I think the mall, it's interesting. It's kind of like it's kind of a tale of two tapes at the mall. Certain stores, I was at the mall recently, seem to be doing pretty well there, and some not so well whatsoever. So I think it's not, all together that every mall store is doing poorly, but I think that some are. And I think to your point, Dennis, I think the big department stores, the Macy's, the Nordstroms, the whatever, aren't really doing as well. But then certain ones, like Money Mitch just threw in Victoria's Secret in the chat. Abercrombie and Fitch, that store was popping last time I was at the Somerset Mall here. We mentioned when we were talking about Lululemon the other day, the new Lululemon competitors. There's an Alo store a Viore store, the Somerset, that seemed to be doing well. So lots of, I think it's a mixed bag right now. You go to malls.
I think this is a retail mixed bag here too, and we can preview some of these retail stocks here maybe right now. We're going a little bit out of order, but there's a number of retailers reporting tomorrow. So we were supposed to get Macy's number, obviously reported preliminary numbers, so we're not going to get those tomorrow morning, but we're going to get their two buddies, Kohl's and Nordstrom, here tomorrow morning. Kohl's trading up here in the pre-market, was trading down on the initial Macy's miss. Now Kohl's has bounced back here. Nordstrom, same story. JWM trading up here in the pre-market as well. I mean, is there a turnaround here for Nordstrom? I want to throw it to Christian Fromhertz here just to get his thoughts on retail altogether. Because the other one, the big one that's going to report tomorrow is Abercrombie and Fitch that AB just mentioned. And A&F has been rocking here for a number of years. So it's not a disaster across the board for mall-based retailers because Abercrombie and Fitch is actually doing quite well. What are your thoughts here as you approach, retail's always a mixed bag here, Christian. What are your thoughts?
Yeah, that's a great way to describe it, Dennis. It's a mixed bag. There's going to be some winners and some losers, and it's this stuff like you go back to last week and Target was a big story, but Target is not the whole story, in retail. And I think we heard from a couple of retailers last week that actually said that sales look pretty good going into the holiday season. Gap was one of those. Williams-Sonoma had a really good quarter last week. So it's important not to make a generalization just because one of these retailers has bad numbers or does something with accounting and so forth. But yeah, you bring up a good point with Abercrombie and Fitch. Last quarter, A&F they kind of lowballed their guidance, and the stock really got hammered on it. So I would be interested, and the stock was down, I think, about 17% last quarter. So I'm interested to see if they if they do something different. And I will probably be looking to play Abercrombie to the upside via, a call spread. Spreads are usually how I trade earnings. But yeah, it's definitely one to watch. I think the chat mentioned Best Buy also reports too this week. Is that right? I don't know if we have that on the calendar.
Yep.
Yeah.
Best Buy tomorrow before the open.
And Best Buy, I think for the last 10 quarters, and when I talk about like what it does in terms of earnings, it's the earnings day. And that was the Abercrombie down 17% on earnings day. Best Buy has gone up out of the last 10 quarters, really consistent. Now, I don't want to jinx it, but it's gone up 8 of the last 10 10 quarters on earnings day. The last 2 quarters for Best Buy, believe it or not, the stock was up 2 quarters ago, up 13%. Last quarter, it was up 14% on earnings day. So,
Wow.
yeah, I think this is these two are going to be interesting to watch in the retail space. I don't know if I'll play this one, but I'll have a call spread on for Abercrombie.
This is just in Tuesday again, because we got the holiday shortened week, Wednesday, Thursday, Friday. Tuesday, we're just going to get hammered with earnings. So we got basically in the morning a bunch of retailers. And then in the evening, we're going to get tech stocks, which we'll preview a few of those in a minute as well.
Crazy.
Best Buy is always a wild child. It's always a wild child, like you said. You know, up 10, down 10, all over the place. They can't figure out where this thing. It has leaked back the earnings gain from last quarter here. So it comes up in the bar, maybe not as high as it is for some other ones. Why the call spread at Abercrombie and Fitch? What do you like? Why do you like the setup on this one, Christian?
I just like that it's the previous, the chart, and it's been such a strong name. If you look at that weekly chart, it just looks like it's kind of consolidating. After that letdown for last quarter, yeah, check out that pattern. Like, I think that's a pretty big like bull pennant. And I'm going to go with the direction of the trend here and just say that, hey, maybe they wanted to just dial it down a little bit because the stock was too hot last quarter. So, yeah, I'm going to go with the direction of the trend, and I'm going to say that this thing resolves higher. And and then you guys have a couple days to go out and buy some Abercrombie jeans to kind of help my cause here a little bit too.
There you go. We'll do that right away.
Well, we were talking about mall stores, and we do have one earnings report we'll get to before we go on to our next topic here, and that is Bath and Body Works.
Oh, AB froze up. I think AB's frozen.
After the report, the company reported an EPS. Hello?
I think you're good. You just froze up for a second.
Can you guys hear me now?
Yeah, we do. You just had a little blip in the matrix.
Test. 1, 2, 1, 2. All right.
You're good.
Got it. EPS came in at 49 cents. EPS came in at 49 cents. That beat the 47-cent estimate. Sales came in at $1.61 billion. That beat the $1.57 billion estimate. Raised the full year 2024 outlook here. So you had the double beat, slight guidance raise as well there. And the stock, again, is trading up about 15% here. Bath and Body Works.
This just goes to show you how retail is just all over the place. You got Bed Bath and Beyond, which obviously disaster, and bigger stores. The stores were too big. We know that. You get lost in them, and it was a bunch of bad stuff. And the store was just 5 times bigger than it should have been. But then you have Bath and Body Works, and they're doing pretty good. So, I mean, it's just funny how this, markets work. It's smaller stores, maybe is what it is. Maybe that is the key with some of these retailers. Like, maybe that's the key. Like the Abercrombie and Fitch stores, to my understanding, like, again, I've been in a few of them, but they're not like super power, huge stores. Like, maybe that's what it is you've got to be like trendy, you got to be on the trends, and you can't have these stores that are like these huge department stores anymore. Bed Bath and Beyond was just too big. The Macy's and the Kohl's and the Nordstroms are huge stores with huge expenses. Bath and Body Works, I believe, is smaller, like retail mall-based store, but still smaller stores. Maybe that's the key.
Boy, on the dailies, I mean, you're up here. You looks like you got a strong bid. Only a single top here, just under 36 or just over 36. If you're looking at a target, 36.15 was your August 26 high. I mean, the other reason that's significant to me is because after you made that high, man, you basically went down straight down about $10. So if you're holding out for another target here, look for that 36.15 and Bath and Body Works. And just real quick, what did the Gap had one heck of a day, but then it kind of it ended up giving some of it back. So, be careful, maybe look for that 10 or 11 o'clock turn if it catches a strong bid. For Gap stores, ended up to be a red candle, but certainly a good day there for the Gap.
All right, now getting out of the retail space, let's talk some natty gas, some natural gas this morning. The sector is largely trading higher on reports that Trump's transition team is planning on coming in after he is inaugurated, and increasing export licenses for natural gas drillers. And so, you take a look at some different stocks in this space. You've got the UNG, the ETF tracking the space up there, Joel. It's up 5% this morning on this news. Again, as Trump's administration is just seen as coming in as being more favorable to these names. Now we have some more clarity. This came from an exclusive report from Reuters that was said that they, plan on expanding the licenses for these companies to do exports and also new drilling. So good news for a lot of these stocks. I saw LNG Cheniere was actually not up that much, up only about $1, so about 0.5%. But some of your other names in this space trading higher a little bit more than Cheniere's. Energy Transfer 10K, ticker OKE, that's up as well. So strong move in the space this morning.
Christian, we'll let you talk this.
boom.
Let's let Christian talk this because they had a great call on it last week. He was talking about a potential breakout in natural gas here. Wondering, one, if you played it, but two, what were you looking at here? Just talk about that setup because it was a great call.
Thank you. Well, what's interesting is last week, of course, we are, focused, or at least I've been focused, and I know a lot of people have been focused on growth stocks and some of the earnings names and some of the momentum going on. But if you look at what some of the energy stocks did last week, you could bring up the XOP ETF, Joel. So that's the equally weighted both energy and nat gas stocks. So you've got a little bit of both in there, and you could kind of see that this is starting to gain some traction, and it was up almost 6% last week. And I don't think a lot of people realized last week, but when you look at the growth versus value ETF last week, value actually outperformed last week's. I think the VTV ETF was up about 2.6% last week, and energy was a good portion of that. You had XOP was up almost 6% last week. OIH, oil services, were up 5.2%. So yeah, there's some stocks that are looking pretty good. I did get long XOP last week just as a play for the whole group.
Yeah.
The nat gas itself, like that's really tough to play because it's known as the widowmaker. So I don't, it really moves around. One day it could be up 9%, the next day it could be down 6%, the next day it could be, So I like to play, rather than play the nat gas futures, I would rather play the stocks. One that I got long last week too is Venom. This is VNOM. So I really kind of think, hey, if breadth expands, which we did see on Thursday and Friday of last week, what are going to be some of the areas that are going to actually catch some momentum? So this is one that I got long last week. I also got long FTI. So that's another one that just, again, and all I'm going by, like, I'm not an energy expert. All I'm going by is strong charts and names that look like they want to push higher. FTI, I did get the breakout in FTI last week.
Beautiful.
And there's a few others that I'm watching. I'm not going to go all in on energy. I was just trying to up my allocation a little bit because there hasn't been a lot of eyes on the group in terms of watching for potential moves higher. EQT is another one that's again, this one's up a lot, but it's pulled back the last couple days. And then another one that I'm just going to wait for a pullback in, which is probably one of the strongest names out there, and I feel like I've missed this one. This is Targa Resources, TRGP. So you look at some of these stocks and you almost think, oh, Jesus, are these going into AI or something? Because they're really, they're quietly showing some momentum and breaking higher. So I think you do have pockets of strength, and I would not neglect the group. And that's why I decided to kind of, and sometimes I'll do this, like I'll start with the ETF, and then I'll start to kind of, maybe I'll pick one name to go along with the ETF, just so I can get, a little bit of an allocation to the group a little bit. So I like it. I like that it's not, you don't see a ton of people talking about energy. And I think that's kind of where when you want to start to look at things. Now, again, you don't want to just put on something that just because, oh, nobody's talking about it, right? You want to just say, you want to go through some charts just as we're going and say, hey, maybe there's something going on here in this group. And so again, that's why I decided I was really underweight, and when I say underweight, not short or anything, just didn't have a lot of exposure. So I added a couple positions last week, and it started to really work last week. As I mentioned, energy outperformed.
Do you
Trump
try and
trade
go
here
for one
too.
of the Trump? Oh yeah, Trump's the one that
This is and then I'll let you go here, Joel. But just wanted to say, like, I mean, look at what XLE has done since the day that Trump was announced, and XOP the same thing. We have the gap up, and it's the gap and go. I mean, I've said this multiple times in the show in the last couple of weeks. You got to have your list. If they're Trump stocks, it's probably not going to change here anytime soon. I mean, he's not even in power yet, and you're looking at 4 years here. This was the best thing for really, oil companies, really, because we know he's drill baby drill. And, obviously you can see the opposite with the tan. It was the gap down. And, yes, we had a bounce on Friday, but I mean, it's just been an epic disaster here. Stocks down significantly since Trump's elected here. So sometimes just take the simple thing and say, look, there's probably going to be continued demand here for oil stocks because Trump is coming into power.
Christian, with those ETA, when you're looking to the stock, do you look for one of the bigger components in the ETF, or do you just try and cherry pick the charts?
I just start to go through, and I'll go through the whole sector in terms of charts, and I will always look towards where the strength is, and because again, I'm not an energy expert, but I would rather just pick something that's trending. I got into Exxon for probably like a couple days, and I kind of gave up on it because it just wasn't moving enough for me. And so I took this one off for like a scratch, and I just decided, hey, I don't have the right trade on. Let me go into something else. So I really just will go through these things without much of without saying, or a bias, I should say, of a name that I have to get into. It's just more or less like, hey, what's a really good setup? And you use the same type of analysis that I use in growth stocks. If something has been, trending and making new highs and then coming down and consolidating, that's generally what I tend to look for. Looking at a little bit of volume helps too. But yeah, I mean, OKE was mentioned in the chat too. Like, that's another name that's been super strong. And again, you kind of pick and choose what you think, maybe do, and then you can, once you find a strong chart, maybe then you could do a little bit of research about the company, find out, are they more into drilling? Are they more into refining? Are they, so you kind of take off from there.
Just real quick, I want to go back to the retail. Remember, we had Mies Schneider on a couple of weeks ago, actually on October 28th. I actually put the date on that one, and I love the monthly chart there on the XRT, that $80 level, kept the cap on it for most of the entire year. And look at that, breaking above it now, up actually did on Friday. Friday was the trade on it. Now, what's important for this XRT, we know the way it whips around, is it can it establish a sustained bid at $80. But I just wanted to give a shout out to Mies Schneider talking about that trading range in XRT trying to bust out.
Alrighty, here sorry, Dennis.
Yeah, I wanted to go to the tech stocks here, so I just didn't know if you're going to take us there, AB, because we have Dan Ives. The chat's asking for it too. Dan Ives upgrading both Snowflake and ESTC to buy. We know we've had Dan Ives on the show many of times before. Obviously, we love our Wedbush analysts here. Big pops here for both these stocks here this morning. Snowflake obviously had the huge pop on the earnings. Started to leak on Friday. We had a little bit of a leak in some of the leaders there, but bouncing right back here this morning with Dan Ives upgrading the stock. And then ESTC, similar story here. Stock had a huge pop on Friday, then kind of gave some of it back, while Dan Ives giving it the bounce back here this morning with his upgrade.
Boy, interesting charts with the snow. I just want to do real quick on that. The snow, let's see if we can get back up to Friday's high. I mean, that was way up there at 178.70. Now you're way above the close. I mean, I think the best thing would be just to establish a solid bid here over the close. That's $7 below, and then building a little bit of base. But high the move from Friday, 178.70, and then you leaked into the close. ESTC, similar setup here. The high on Friday, 118.18. That's a nice round number, but Still $6 away from that. So a little bit of overhead supply, both these stocks.
Yeah, just some details here. The price target, $190 here for Snowflake coming from Wedbush. Upgrades to outperform with that $190 price target. You're now trading at around 175. And then what was the other one? ESTC.
Mm-hmm.
Yeah.
Elastic is up about 4%. The price target there is so Elastic actually got a couple different. Looks like Wedbush upgraded to outperform, announces $135 price target. Also from Barclays, an $138 price target from 105. And then Palantir, you mentioned, that got a very strong upgrade to $75.
Price target raise, not an upgrade on Palantir, I don't believe, but Dan Ives raised the price target to $75. And again, a retail-driven name when you have a retail following of Dan Ives. So again, I've specialized in trading ratings for the better part of 20 years. So it's important to understand who's upgrading it. Are they widely followed? Why are they upgrading it? And again, if it's an upgrade or not an upgrade. But in this case, it's not even an upgrade. It's just a price target raise. But because it's coming from Dan Ives, who's widely followed by the retail community, and it's on Palantir, which may be the most widely followed stock in the retail community right here now, this is going to predictably get a huge pop on this, and we are seeing that here. This is a breakout now again for Palantir. People are on there saying the valuation makes no sense. Maybe it does, maybe it doesn't. But remember what I say, when the story is hot, valuation doesn't matter at all. When the story cools off, then all of a sudden valuation can matter. But if the story is hot, it doesn't matter. Don't worry about valuation when the story is hot. Now, again, if you get breakdowns, and you start to, the story cools off, then valuation does matter. So I don't know if you want this in your long-term portfolio or not, but for a trade, the stock is very hot.
Bank of America is ringing the bell too there. They raised their price target to $75 as well. So there you go, trading at the highs of the pre-market session. I believe this is a new all-time high. The previous all-time high was 66. So we'll see if that acts as any kind of support today. Christian, what do you have for me on Teladocs?
Yeah, well, I'm just watching some stocks move, and this week, by the way, we're in a strong seasonal period. I think the market likes this week in terms of a shortened holiday week. So and I know Dennis talks about story stocks, and you now have a lot of names that are running that have been kind of left, and I know that you guys have talked about like Kathy stocks too. Well,
Yeah.
you've got a headline this morning about Teladoc. I laugh because I haven't traded this stock or even looked at the stock in a long time, but Teladoc launches new AI magic using the magic AI enabled capabilities for virtual sitter solutions, and this stock is off to the races pre-market. It is up to 11.25 here this morning. So there's a lot of these little stories that are coming out. So I don't really trade Teladoc, but I just thought I would mention it because there's news on it and the chat's talking about it. There's another group that I just want to bring up really quickly. There's a couple stories out from Amazon this morning. So number one, and they're talking about quantum computing, right? And this is another story centered group, Quantum Embark program that they're launching. So there's a couple names in here. IONQ has been very, very strong in
You've
this
been talking
space.
that one.
Yeah, I
Great
don't
call
know
by
it.
you too.
Thank
you
you.
were in it for a while though.
But yeah, it's just too much momentum, and I just don't have the capacity to sit and watch this thing because of the moves. But another name that's moving is, just to give you a couple symbols here for the chat, QUBT is also like a very small cap name. I just thought I would mention this story because when Amazon or one of these big companies talks about that they're running a quantum computing program, it gets some of these names to get going. So I just wanted to bring that to the chat's attention.
I mean, that's where we're at here. Is a retail-driven market right now. And to Christian's point is you're coming into a seasonally retail-driven period here. So it's not surprising that a lot of these names are talked about in social media, on Reddit, on X, on the Discord rooms. You've got to be aware of that because right now, especially when stocks are breaking out to new 52-week highs, it's a driver. I mean, Tesla fits in that same category here now. Again, we on this show have been talking about Tesla, just a long-term story here, but this is now a retail-driven name here too. And I've just been playing the Friday trade, not only in XBI but Tesla as well. I've been buying more Tesla on Friday night because it seems like every time we come in Monday morning, it's up significantly again. So, I mean, just pattern recognition here. And it doesn't, even though you're long Tesla in your long-term account, doesn't mean you can't be long it as a trade as well. I just buy extra shares. Obviously, if they came out bad news, it hits it ding-ding, but feels pretty good, when Tesla moving like this. But this is just the market we're in. The tech stocks, the highly driven retail names are really, really driving the bus right now.
And small caps. I think last I checked, small cap futures are, small caps had a big week last week. So again, that's why I'm mentioning a couple of these smaller cap names because, this is really where I'm going to use the M word again. This is where the market's got a lot of momentum. It was a real nice week for not only IWM last week, but microcaps, which is IWC had a huge week too last week.
People saying in the chat, just go back to the Teladoc here. This is a stock that I've hated on for a long time and definitely been correct. 300 to 200 to 100 to 50 to 30 to 20 to 10. I'll tell you right now, though, this kind of stock is the stock that retail grabs a hold of and could continue here. So I would not want to be short this name right now. And in fact, again, you're chasing it a bit. It was $9 a couple days ago here. But this is the kind of name that could just go 11, 12, 13 in a hurry on you. So, it sets up actually to probably buy dips on this stock right now. Not in your long-term account. Not saying I'm putting in Teladoc and this is the turnaround story and this is the next Carvana. It's going back to 300. I'm not saying that at all. But short-term, these are the kind of names that are moving now. The former darlings that are now showing a little bit of life after basically 3 years of just showing nothingness. So, or destruction really, because Teladoc's been going basically straight down for 3 years. But we've consolidated here. We've broke out back to double digits here. I mean, the setup on TDOC actually sets up well to the long side right now.
Is Kathy still in this one? I cannot remember.
Actually.
I know she was buying. I don't know.
She was. I don't know. Maybe the chat could get
yeah, because remember when we had Sean Emery on a couple weeks ago, he was talking about Zoom and when she liquidated that long position, like he waited. I don't know. I don't follow her.
I'm
emails.
looking through it right now. Ooh, I don't know.
I don't think she does. Actually. Yeah, I don't think she's out of Teladoc.
You think she's out?
Looks like it, yeah.
I don't see it either. She sell this?
That's a great call, Joel. So when there's a big fund that holds it and all the way to the down, to the downside, and because is she in Unity Software anymore either?
I think she's still in Unity. No, maybe not. Holy, Kathy, I've given you some love here, but this is not looking good for you when these stocks start to ignite that and you sold the bottom on a few of these things. For top holdings and ARK, this is obviously the main fund, is still Tesla at 14.2%. Roku, Roblox, which I recently took the position in RBLX, and it's not doing great so far. I'm hoping that can come around. Coinbase, which has been unbelievable. Palantir, Square, CRSP, Robinhood, which has been a great one. Shop, and UiPath. So I don't see Unity in the top holdings. Maybe it's further down the list, but she is definitely, and now they're saying she's fully out of that one too. There's a few of these stocks that are getting love that were former Kathy darlings that she has sold.
Yeah, this Teladocs has still got a strong bid here. I'm not giving resistance anymore.
I don't think you want to. I honestly, on Teladoc, I'm saying it right here. I don't want to flat out say it, but it looks like retail's got a hold of this thing. I think it's going higher.
It's the throw in the towel trade. It's when they hold it all the way, where it's down 80%, and then they've had enough pain, and they say, "Okay, I got to get out. I got to get out of this thing." That is sometimes when the stock actually starts to recover.
Okay, right, so Seymour in the background here. We're gonna go.
Okay, yes, yes. All right. He said he was on his way here, so. I'm manning the controls here real quick. Let me introduce our guest.
The volatility right now is really incredible. Joel does.
I knew that was going to happen. All right, let's add him to the stage. We all know Tim Seymour. Seymour Asset Management, CNBC, a familiar face. Tim, how you doing today?
I'm great. Hopefully, my on location in Central Park is not something that's thrown you off. I was in a commute gone bad, and I figured I can't miss my call time, so let me find a park bench on my way to the office. So here I am, and it's a beautiful morning here on Thanksgiving week, and a lot going on. So great to be here.
Tim, I've got to give you a little bit of heat here, and you knew it was coming here with the Rangers-Oilers game. He knew it was coming. The Rangers-Oilers game from Saturday night. Oilers finally found a way to beat a goalie here. We got lucky it wasn't Chesterton, obviously, with the start, but Quick had been hot, and then the Oilers found a way to beat him. So I'll give you a little bit of heat, and then that'll be the end of that.
No, you pile it on, because I mean, we need to feel some sense of discomfort here, and we need to understand that unless we turn some things around with our D, I mean, the Rangers have been giving up 45 shots a night for the last 3 games, and you can't do that. So the bottom line here is you've got goalies that have been standing on their heads, and really not a very tight, a lot of giveaways, a lot of loose play in our own zone, and no one's going to win a Stanley Cup like that. So unfortunately, we're 18 games into the season for the Rangers, and we've got some time. But
lots of time to fix it.
Oilers looking great. Yeah, Oilers looking great.
Goaltenders, unbelievable though. I mean, for you, like Chesterton, obviously been on fire here, one of the best in the league. So it's always good to have a goalie. But we got stocks here. A lot of times when we start talking hockey, the pre-market prep chat starts to fall apart here. So let's talk some stocks here, Tim. What are you looking at? What are you watching?
Well, I think the combination of the seasonal dynamics here are interesting. The wrestle between where we are on a post-election tariff dynamic, higher rates. I mean, all the things that everybody's digesting. The reality is, it was a pretty solid third quarter earnings season, and we had very strong performance by the names you expect, but there was also some really solid margin dynamics that were delivered from industrials. Banks obviously seem to be everybody's favorite, yet they were so unloved for so long. And I do think there's reason to continue to be long some of those trades. So it's a fascinating time of year. It's that time of year where everyone's looking towards next year, and I'm not sure we can string together. After a 60% move from October to October of 22 to 24. It's hard to understand where the next that next move is going to come from. Having said all that, the setup's pretty solid here, and leaving aside people trying to read through cabinet appointments, what it means for the economy. It's interesting to hear Scott Bessent talk about he's a student of history, and yet he wants to cut taxes, and he needs to somehow worry about the deficit. I mean, these are things the market's worried about, but one of the things that we say all the time on Fast Money, it's one thing to have the fundamental setup and be, I don't know, to be concerned about some of the macro and some of the structural issues out there, like a deficit, like rates that look like they could go higher. But the market you have in front of you right now tells me that the Fed is your friend. And again, the earnings profile over the last 2 quarters has been pretty solid.
I mean, Tim, that is a concern here. When we look at like the TLT, we look at the bond market, and we look at long-term rates going higher here. And then you see the stocks just completely ignoring rates. And obviously, the tech stocks are getting hot. Some of the smaller retail names are getting loved here. Is there a point in time where, like, let's say the TLT continues to go down here? Is there a point in time where the stock market starts paying attention to what's going on in the bond market?
It is, but it's probably not till closer to 5% on the 10-year. And the reality is, both historically and even in the context of this move, I don't think people should even be that concerned about 460, 475. I do think that people have to digest existentially what running deficits and 6 to 7% of GDP and those dynamics that anybody that understands or has followed the Japan story or other places, it doesn't work in the long term. But I do think that in the short term, the more important dynamic is the dynamic around the strength of the economy. A growth scare would be a lot more significant for this market than a deficit scare. And again, I don't know when we're going to pay the piper. You've been having this conversation with smart people for a long time. I've been having that same conversation. Yes, you should be concerned about whether the rest of the world's going to stop buying our debt. It's not tomorrow, and it's not next year. So I think We had a very solid ISM on Friday, while a noisy data series initial jobless claims tell me that anybody that thinks that there's a problem with the job market right now, even with long and variable lags, I think the most important dynamic, and this speaks to what's been going on in discretionary and kind of the breakout you've seen in the XLY, is that the economy looks solid. And the services side of the economy, particularly, we got that read on Friday, even if there is some inflation. So the Fed is certainly still on your side. If anything, the other half of their mandate, which is the job side, is something that Powell has made note of. So those would be the things I'd be more worried about than the deficit.
What about China? It's been ugly since Trump got elected here. We've seen a straight down move in Alibaba, a straight down move in Baidu, a straight down move in the FXI. We've given back that huge move that we had when China was coming out with the stimulus that we saw in September. We've basically given back almost that entire move here. Is there a point here where trying to call a bottom here again in China? Is this a dangerous trade? Do you stay away, or is there a turnaround here?
I don't think you ever try to call a bottom in China. I do think you have to be an investor in China and have a view that with a name like Alibaba with 45% of market cap in cash, who's not really, shouldn't be, the determinant of the direction of that stock should not necessarily be the China macro. Now, I realize it is, and I understand stimulus and all the rhetoric around stimulus is what gave it a 30% move before it gave it all back. But the fundamentals there, bottom up, are pretty solid. I've been long and I have traded, but certainly not to a profitable P&L in the last 6 months. Alibaba. I do think you stay long the stock. I do think Tencent is one of the more interesting tech incubators in the world, and I do think that those are names that I can feel comfortable with owning 2 to 3 years. Certainly for my investors, that's something that we take the view. We took the view on some of the KWeb and certainly those two stocks halfway through the year, and I think it's something that we can continue to do. I don't know when the market sentiment and the fundamentals are going to line up to some catalyst that will really see a sustainable move higher. I think there's so many questions about where we are with China. China sentiment, as an EM guy for much of my career, I've never seen China sentiment this low. I do think that there are some dynamics with China that people always misunderstand, and that China really does play the long game in terms of also how they want to view their, not just their market, but that they're a money center, and that the governance dynamics and some of the things that actually have been at times questioned about Alibaba and listing standards and things like that. I think I'm not worried about that, and I'm probably more worried about the way the market's going to treat these stocks. So disappointing, but I think that would not be where I would be expecting some kind of either a macro change or a turnaround in the next 3 to 6 months. Having said that, I do think that those stocks can bounce off these levels. Pretty key levels in Alibaba right around here, and you've given not all of it back, but I think you've given a little more.
Tim, a big theme on our show since the election has been Trump stock or not Trump stock.
Okay.
And we know who some of the winners are. And one sector that you follow, the cannabis sector, not really falling into that category here. Talk to us about the prospects for the marijuana sector.
Well, I think, because this is such a sector beholden to liquidity dynamics, and frankly, there's been no new liquidity in cannabis. It really gets thrown around like a rag doll, and the expectations of what this administration is going to mean for cannabis are still very unknown. It was the political football that both sides grabbed onto down the stretch. I was investing in cannabis in Trump 1.0 and even before that, and the advent of where AG Sessions was starting to lean heavy on the sector back then really was not something that ultimately anyone should have been worried about. Trump has let the states do their thing. Trump has allowed, I think, the politics around cannabis, it's a bipartisan issue. It's a sector that I think will continue to have more people understanding why this is an addressable market that grows. But I don't know what on the macro side, legislation-wise, is going to happen in the short run. I think there are opportunities for owning a bunch of names in cannabis, but if you are playing for a macro headline, you're going to be disappointed. I do think that critics of cannabis will tell you, one, I don't even know what what multiple the sector is supposed to trade at. I don't really know what the margin profile of these companies should be. If they do reschedule, and that's something where we've got hearings coming up in a couple weeks, that I think the market has presumed that the DOJ is not on board, really, despite all the rhetoric. But that if you start to see rescheduling and free cash flow from operations grow dramatically, that's something that I think, of course, is going to would rally the market 30 or 40% almost immediately. But the give back from the election disappointment, notably the Florida disappointment on the adult market there, was something that both sentiment-wise and positioning-wise caught people way offside. So I think for cannabis, again, I think the fundamentals are fascinating. I think the size of the market continues to grow. I think it's underrepresented. I think there are structural challenges, but there are companies that are going to be huge winners. And I think investors that are playing for the long term and are understanding how to look at the balance sheet of the companies they invest in are going to do well.
Tim, we know you're a top-down fundamental and also, do your own technical analysis, but we're coming into a period of seasonality here.
Yep.
And boy, oh boy, strong seasonality coming up for the end of the year, the Santa Claus rally, tax loss selling. I mean, I guess there's some stock. There are some stocks that have gotten killed. Yeah, there are some losers somewhere. Just talk to us about, the seasonality coming into play here and perhaps some new strategies for 2025, just around the corner.
Yeah, maybe Kathy Wood was tax loss selling ahead of big moves in these names. I don't know, but no, it's hard to for me to fight some of the seasonality here. I actually think that there are a lot of managers that have been overly cautious, and so I think there's still a pain trade higher. I really do. I do think the macro is going to continue to be probably what it has been, which is that inflation is stubborn, and so some of the macro that would be driving the market story is for the most part going to be the headlines you've seen. I think the economy is chugging along. So I think there's an opportunity to continue to see the broadening of the markets. Investors should be concerned about the underperformance of some of the market leadership in the last 3 to 6 weeks and even 5 to 6 months. You guys probably follow this all the time, which is the underperformance of the NASDAQ. It made relative highs back in July. Semis have been giving up the ghost, and although NVIDIA downshifted expectations last week successfully, I thought. We'll see, but the rest of the semi trade's been under some pressure. It's nice to see airlines and banks and some industrials and the GMs of the world were names that I've been also very constructive on fundamentally for a long time, which really underperformed and were dead money, and they are moving. I like those trades to continue. And again, GM, even after this move, is trading 5.5 times. So a name I'm long, a name that was frustrating. I think that's where investors should be focused. My glass is half full in terms of the direction of the market, and I think the next seasonal encounter is more likely to be after you get through some January effect. It's going to be April, May of next year. That's where we really start to pay the piper. If I'm going to oversimplify my sequencing for this market, that's kind of how I see it. And I think the broadening, I get maligned for saying on Fast Money, hey, why does anybody need to invest in small caps? I just think there's a disproportionate amount of time spent on small caps for most investors, or at least in terms of people focusing on the group. There's a lot of money to be made in there, but the reason I'm bringing that up is because, yes, that broadening that's included equal weighted in small caps has been notable. I'd rather look at the sectors that have underperformed that are really a big part of the S&P. I like the opportunity in healthcare. I understand some of the headlines have also, since the election, been negative. There are names in there that have also been multi-year underperformers. Those are places I think investors can get comfortable with, because it is about having names that you can sleep on at night. And so a J&J, which is another name I'm long and has had a number of overhangs to it, notably the talc litigation, but has 3 core businesses which are very strong, and their pharma business is probably the one that's the one I'm least worried about, but the one that's even the least sexy. So there are places to invest in this market, but a market that you asked about the seasonality. I wouldn't fight the season.
I mean, this is just it's so interesting you bring up rotation here, and if we look at mega cap, the mega caps, even the Magnificent Seven, really. I mean, Apple really going nowhere for the last couple of months. Microsoft really going nowhere for the last couple of months. Meta's been going down. Google's been going down. I mean, Tesla is, its own animal. It's retail driven. Obviously, there's a different story there. But I mean, all of this money, is this what we're seeing here? Is that the money is coming out of the Magnificent Seven to a certain extent and just broadening out to other sectors?
I think they're a funding source, and I think they're going to continue to be a funding source. And if we were doing the show last year, and I'm sure we were, and I'm sure I was gloating about the Rangers Cup chances, I would have told you that you're not going to see 7 stocks be 30% of the S&P ever again, and that you're going to start to see some of that give ground. It is giving ground, and it's kind of like the deficit and what that means for both the economy and the market in the short term. I don't think you're going to see this happen dramatically in the short term, but yes. That is a dynamic that we're seeing. And I think it's good for international multinationals that are benefiting from a stronger dollar right now. I think, I run an international ETF. IDVO is the ticker, where it's a div enhanced international. So it owns best of breed international blue chips. And I just think for a lot of those companies, this is a great environment. So you are seeing fundamentals a little bit more focused on international. There, the U.S. tech exceptionalism, I think is the term people use, is real, but it's something that we've traded for 5 years. So it doesn't turn around overnight, but yes, they are a funding source right now. And that's why some of these other trades, including banks, where there's a lot of capacity to put to work, I think is part of why you see this run.
We've been on the line with Tim Seymour, CIO, Seymour Asset Management. You know him. You see him on CNBC. Joining our show from Central Park. I think you might be our first guest ever to do a live interview in Central Park.
I know I gave you a taxi cab one day, and
you did.
This is what I do. I mean, it was better to show up than to phone one in and say I can't do it.
Fantastic.
We love you, Tim. Thank you very much. We'll dial you up for the new year.
Thanks, Tim.
Bye.
All right. Well, here we are, AB. Did we miss anything?
I don't believe so. I think we hit all the biggest topics. We mentioned some of the companies getting ready to report earnings tomorrow. I mean, just taking a look at the overall market as we head into the open, the S&P 500 up 0.7%. We're getting back right there to all-time highs as, again, we head into the open here on the shortened week. Let me pull up the exact schedule. Is everything on? Is Friday a half trading day?
Yeah, 1 o'clock. Yep, 1 o'clock on Friday. We got some fireworks tomorrow, AM and PM with earnings. We'll be doing our regularly scheduled program on Wednesday and Friday. Triple D. Let you give your final comments, but. We're talking retail, so why not have Ryan Craver on tomorrow from Commerce Canal? He'll be breaking down the wild and volatile retail earnings. Triple D, final thoughts.
Just the momentum in those, growthy, lower earning, but growth tech. That's really where we're at. We're not in mega cap tech. It's growth tech. Like this story back, obviously with Snowflake, we already talked about Tesla leading the charge here. I mean, pun kind of intended, but it's a new 52-week high again for Tesla here this morning, up another 9 points. I don't see this really, I think it continues. I think we, are going to see, dips. We're going to see some wild moves. I don't know if we're going to see a rug pull here imminently or not. But I mean, Dell again breaking out. I sold my Dell last week. That was a mistake. We're at that point here, and we just look at the companies even reporting. Like CrowdStrike might be one of the best examples of the comeback here. I mean, CrowdStrike obviously got cut in half after the cybersecurity issue that they had, and then it's all the way back. It's all the way back, and it's going to report here tomorrow night. So I mean, it's trading up ahead of that report. There's huge resistance up at those old highs at 398, but I think it's just a growth tech kind of market right now. So not looking at the Microsofts, not looking at the Nvidias, not looking, at the Googles and the Metas. It's looking at what has been in the gutter and what is turning around here. That's really where this market's at.
Well, Yep, that'll be a wrap for us today on Pre-Market Prep. Again, we'll be catching up with Ryan Craver tomorrow morning. We'll be live every week this week, except for Thursday, of course, Thanksgiving. With that, guys, enjoy the rest of your day. Happy trading, and we will see you guys tomorrow morning.
Thanks, guys.